Hey everyone, me Kevin here. Let's talk about the Tesla Etf, Tesla's deliveries for Q1 2021, which are bound to be released within the next 24 to 48 hours. And hey, let's also talk about, well, the future of Tesla. It's very, very important. Okay, so here we go. First thing first, the Tesla ETF. So when we think of ETF, usually we think of things like ARK Invest, ARK X, ARK K, ARK G, ARK F, Vanguard, S&P 500, index fund, which is kind of a style of ETFs. There are two types of ETFs, an index-based one or an actively managed one. A little nuance there, it doesn't matter so much. And yesterday I came upon a comment that I thought was really brilliant. What do you think of this? What if you could buy an ETF, an exchange-traded fund, that included charging companies, maybe a set of battery companies, an insurance company for vehicle insurance, regular consumer cars, residential consumer-style cars, like mom-and-pop cars, your car, my car, commercial vehicles, like for deliveries, solar panels, solar inverters, solar roof, grid sustainable energy products like megapacks, power walls for powering people's houses, automation, robotics, and robotaxis. Well, that would sound like a pretty freaking awesome ETF. And then you kind of draw the connection. You're like, wait a minute. Tesla is literally all of those things. Tesla stock and Tesla as a company literally has their hand in the cookie jar of all of these things. It's incredible how fast Tesla is. We think of Tesla and it's like, oh, you picture of a Model 3 pops up in your head or a Cybertruck. That is just one part. It's kind of like you could buy Faraday Solutions, the car company, let's say, or Faraday Futures, and get access to a car, right? You could buy QuantumScape and get access to battery technology. You could buy ChargePoint and get a charging company. You could buy Geico and get car insurance. You could buy Arrival to get commercial vehicles. You could buy solar panels from Canadian Solar. You could get solar inverters and power walls from Enphase, and you could get grid products probably from somebody else. I can't think of a name right now, but you could get automation from NVIDIA and Qualcomm and Intel's Mobileye, and Robotaxi, probably those as well, right? Those are all different companies, which in theory, they each do some of those things really well. Like Enphase does really well at solar inverters and battery backups for houses. But Tesla stock itself literally does all of these things. And this is what makes Tesla so multifaceted. And I think when we think of Tesla stock, we just think about cars and the production of cars. We completely forget that they're making innovative batteries, the 4680 cells, that they're expanding their supercharger network faster than any other company is expanding their supercharger network. Tesla's got around 1,000 superchargers. Combined, other companies have around 4,000 superchargers. And I don't mean all chargers, I mean DC superchargers. Tesla's killing it. One of the largest. Semi-trucks, the Tesla Semi is going to probably start getting delivered to Pepsi here towards the end of the year, and we're going to see a factory designing or manufacturing the semi-trucks outside of Nevada probably this year, which is incredible because originally we were thinking, oh, the semi-truck will be built in Gigafactory, Texas and Austin. Well, now we might have two lines assembling and delivering and producing and manufacturing and delivering semi-trucks. It's incredible. So when we put all of these things together, you realize, wow, Tesla really kind of is like a really volatile ETF. Because look, it goes up and down like 33% all the time, right? But in some ways, it kind of is like somewhat like an exchange-traded fund. It's obviously not. We can't call it an ETF, but it kind of acts that way because it covers so many different things. It's like the best potential diversified growth play if you can only ever pick one stock to invest in. Look at all the different verticals you get. Really, really incredible. And we don't even give respect yet to car insurance or the future of Tesla's Dojo supercomputer that could potentially be its own standalone business. It's absolutely incredible. But enough sort of gawking over Tesla and this ETF idea. Let's just take a moment and talk about delivery numbers for Q1, our expectations for those. So here's the thing. Wall Street expects 174,000 vehicles to be delivered. This is slower than the pace that Tesla has leaked that they are trying to reach. Tesla is trying to get to 1 million vehicles per year here in 2021. So this year they're trying to get to 1 million vehicles and break that 1 million per year number. Obviously next year it should grow even more. Wall Street really expects Tesla to deliver somewhere around 880 to 900,000 vehicles this year, which would be significantly more than the 500,000 that they delivered in 2020. But 1 million vehicles delivered would be doubling that 500K from 2020, and it would really, really go to show that, wow, Tesla can scale a lot faster than they're oftentimes given credit for. And we're really at the beginning of that S-curve. Now think about it. When you have the Gigafactory Berlin hopefully coming online this year, Giga Austin coming online this year, the expansion at Shanghai and Fremont coming online this year into next year, and now an expansion outside of Giga Nevada for the semi-truck line. This is incredible. We're just at the beginning of Tesla's growth. However, we do have quarterly data coming up. Quarterly data is going to be a little bit interesting because the Wall Street expects 174,000 vehicles to be delivered, and there is a good chance that Tesla is actually going to miss this delivery expectation. I wouldn't be shocked if it comes in dangerously low at like 150 to 160,000. Now, I hope it doesn't, but it wouldn't shock me, and that's because there have been some issues. First, the Model S and X have been going through their refresh cycle. Maybe not as big of a deal because they make up a smaller percentage of vehicles sold at Tesla anyway compared to the Model 3 and Model Y. So it really depends. A lot is going to depend on how well those have scaled up. For us to see a Tesla beat, it would be extremely bullish. Like if Tesla came in as like we delivered 180,000, oh my gosh, that should move the stock pretty nicely. If we get at or a little bit below expectation, I think a lot of folks think that's probably what's going to happen. And again, we even had a fire at Giga Fremont. That's not good. It was a small, I think it was in one of the metal tooling shops or something. There was a fire at one of these. It was a small scale fire, but it's still a fire, and that causes delays. That damages products and damages machinery and causes delays. So it wouldn't shock me to see a miss on Tesla's deliveries here in Q1. Q1 is also notoriously a slower quarter for electric vehicle manufacturers. Wouldn't be surprised to see some more pain for NIO as well, especially since they shut down their line for about a week. Now, keep in mind, the reality is these electric vehicle manufacturers, they might all be suffering right now in this electric vehicle sell-off, but we've sold off so substantially in the EV space, it's possible that these delivery figures will only actually make a difference to the share prices if they're way higher than expected. Because we are slowly starting to see, the last couple days we've been green on, for example, Tesla and NIO. Maybe we're starting to see a little bit more of a push towards the future of these companies growing well and getting back to a higher stock value than where they are now because we've sold off over the last 5 weeks. But yeah, I don't think, personally, sort of a bottom line, I don't believe that this quarterly data is going to be that exciting. I don't think it's going to be that good. I wouldn't hang my hat on it for short-term, calls, for example. I might hang my hat on Tesla for short-term calls just because Tesla's momentum has started trending towards the stock price going up again. But these delivery figures I'm not very optimistic about. But it's not going to negatively affect me in the event they come in low. I'm kind of expecting them to come in low. And usually I'm pretty optimistic about Tesla, and I'm not expecting them to do poorly. And this quarter, though, had a lot of issues. Not just the fire, but also the S and X refresh where they're changing the steering wheel and they're changing so many parts. They're taking the facilities offline for a bit while they conduct this refresh, and they're full steam ahead at trying to get these manufacturing lines back up and running at full capacity. So not super optimistic about this quarter, however, very, very optimistic about the long term, and especially the fact that we've had the leaks from Elon Musk and Tesla that they're targeting 1 million vehicles this year, which quite frankly means if we come in at 160 this quarter, which Elon already knows what the deliveries are likely going to be like, so he's already got probably a very accurate estimate in his mind. So when he thinks we're going to get to 1 million vehicles this year produced, think about what that means. Let's say we come in low this quarter at 160, and then next quarter we get to, say, 250, just as an example. 160 plus 250 is 410. That means we're going to have to do 590 in 2 quarters towards the end of the year, which is approximately 295,000 vehicles per quarter. That means we're probably by the end of this year going to be somewhere around 300,000 vehicles per quarter produced and sold, produced and delivered by the end of the year. If we get to that kind of pace going into 2022, 300 and growing, right? But 300,000 vehicles times 4 quarters is 1.2 million. I think we're going to grow way better than that once we get into the next year, but I think we're really going to see a massive growth. So for example, my projection might be 160,000 for Q1, get to say 250 for Q2, but then we're probably going to overshoot 3 pretty quickly. Go to either 300,000 in Q3, maybe we get to that 325, 350,000 in Q4, and next year we start getting into, ideally, for 2020, we start getting, ideally, to 400,000 vehicles per quarter, because that's going to put us on pace for 1.6 million deliveries in 2022, which is roughly my target, and I'm super excited and bullish about that. But that's how I expect this deliveries period to ramp up. So we'll see. We'll see. I think there's going to be, we're definitely going to want to be patient here. We'll see how these deliveries come out. But I think we're at the beginning of a curve here, and 2021 is going to be sort of the last of those really slow growth start years. Going into 2022, I think we're going to blow expectations out of the water Q1 2022. That's still a year away, which for me, I look at as a benefit. Hey, the longer Tesla takes to go to the moon, the more time I have to buy more shares. Thanks so much for watching. If you found this video helpful, consider sharing. Get yourself 2 free stocks with Webull via the link down below. And folks, we will see you in the next one. Thanks. Bye.